Hey traders, Raghi here, and I am in Austin for the next 2 days here at the mothership of Simpler Trading, and we're going to be having some different events out here that I'll be presenting in. But in the meanwhile, I'm going to take a look at some of the trades that we triggered on Friday and also how those are going to follow through, because it has a lot to do with where the Dow is, the current levels on the Dow. So let's go ahead and jump into the New Zealand dollar Japanese yen and the British pound Japanese yen, and we're going to tie it up with the Dow here in just a moment. So we have some trend follows that took a pretty scary ride. In fact, it was the Bank of Japan's volatility, triggered volatility with the negative interest rates, that gave the yen that huge sell-off, corrected both the New Zealand dollar Japanese yen and the British pound Japanese yen into the wave. In fact, the individual currency story that actually did better in terms of handling that yen weakness was the pound. And the reason for that is the pound is one of the weaker individual currency stories that we have. Basically, what we've been seeing is the pound and the Kiwi, the New Zealand dollar, just kind of, going back and forth between being number one and number two in terms of, weakness. So we just kind of see that going back and forth. But these are our two favorite weakness stories, and we're going to continue to focus on that. So with that in mind, when the yen got very weak, what ultimately happened was we started to see the Aussie yen and some of the other either neutral to strong stories like the Aussie yen, US dollar, Japanese yen, those corrected, if not flat out reversed, because there wasn't enough competitive weakness on the other side of the yen. So yet another reason why it's so important to understand contrasts, and why I have the update in the members area that I sent out over the weekend, and hopefully you checked that out. And we had a Dow discussion as well. Now that Dow discussion is going to be unbelievably important. By the way, in the morning chat, we will dive into some more of this dollar yen, because while I may not necessarily be that interested in dollar yen, it might tell us an interesting story about dollar and Japanese yen separately as we tackle this 200 period simple moving average. Now, in order to get the follow through that we want in the New Zealand dollar, Japanese yen, and the pound yen, we need to see the Dow start to move lower. One of the things we talked about on Friday and also into the weekend with the update that I sent out was the fact that this is a really nice 34 EMA conservative entry. Now, this is a short. Now, the way that we got up to this level, that Bank of Japan rally, that is where I think we can be very opportunistic with this likely being fairly unsustainable. So in and of itself, I'm not just going to hop in to a strong rally and say, let's go ahead and sell into this. Let's talk about the context. We have an overall downtrend here. We have a very dramatic move to the upside that led to a conservative entry, not an aggressive entry, not a BTG entry, a conservative entry, that 34 EMA on the low. So what I want to do is realize unsustainable move to the upside, which yielded a very sudden correction, and now isn't just dealing with a 34 EMA, but also we're just kind of dealing with this zone here of resistance. I think that the path we take from say 16,350 up to say 16,550, which would, frankly be another opportunity to sell. But this area becomes very interesting because I think we need either a very strong earnings release from a heavier weighted stock in the NAS, in the S&P, or the Dow to kind of kickstart a little bit of risk appetite if we're going to see it at all. And when you see something like what happened in Amazon last week, and you start looking at some of the moves in the Nikkei in terms of, my feeling that if we're going to be led back into risk appetite, which I am not a believer of, I'm not betting on that, literally and figuratively, if we're going to see risk appetite continue, I think we're going to find the evidence of that in the NASDAQ as we look to stocks like Facebook, or we can take Amazon out of the picture here, but Facebook, Netflix, whether or not we see Google. How much are we going to rely on Google now? If we're going to see risk appetite return, how much are we going to rely on those FANG names and emphasize some of the names that are doing a little bit better, like Facebook or Google? I just assume stick with the trend, accept this correction as a tremendous opportunity, and we're playing it not only on the Forextra side of things with the Dow, but also with the Forex side of things with the New Zealand dollar, Japanese yen, and the pound yen. Now let me go back to that heat map one more time. Take a look at the better contrasts, not the best contrasts, but the better contrasts. As I look at pound versus New Zealand, pound versus Japanese yen, am I going to start to think about some of the other names that we had on our watch list, the watch list that I sent out before the BOJ, the watch list that we talked about in terms of my favorite names? Those are going to be names like the pound versus the US dollar, the New Zealand dollar versus the US dollar. And so that's also another focus that I want to have this week as we go into non-farm payroll. So now this gets very interesting in terms of the impact on the dollar and the way in which we can start to interpret what the dollar index may do as it digests a likelihood of rate hikes only later this year. I've mentioned a number of times that I find it downright laughable that March is on the table. Now, some of you might say, well, Raghi, what if we get another really good non-farm payroll? What if the market sees a non-farm payroll that does what November and December of 2015 did to the markets, and we got that Fed funds hike? The FOMC, Janet Yellen and company, really only got one shot at that. That play on one half of a dual mandate, a self-imposed dual mandate by the Fed. One half of it, we can't justify. I don't believe we're going to see the Fed start to use jobs again as a rationale for higher rates. We're going to have to see some sort of inflation story, whether that be the CPI improvement, and I don't believe we're going to see that unless we see a balance in the king of commodities, and that is crude. This is why I continue to be a Canadian dollar bear. That's why I continue to look for, and even though this is corrected very dramatically, this is why I continue to look for shorts on the crude oil market. So we're going to take a look at all these markets tomorrow in the chat room. And, what we've just talked about are some broad strokes. We're going to jump into the detail of the trade management of those open trades that are looking pretty good. I'll get into the details of some options in the Dow, at least some strikes, and whether or not we can still price those out. But we also have the open short in the Dow, the open short position in the crude oil market, those coordinating moves in New Zealand dollar, Japanese yen, and pound yen with the Dow. We've talked about how we could take advantage of copper if the risk aversion continues, and we want to start to add the US dollar into the conversation, but be strategic about the volatility and when the opportunity to short could arise in terms of the volatility we'll see on non-farm payroll, and whether or not we want to go long dollars into that hot zone, or whether we're going to use that hot zone for what I call it catch the wick. So we'll be talking about catch the wick this week. It's an amazing strategy that allows us to just wait for the market to come to us while having the calculations, the pip movement calculations that allow us to really quantify where the market can go, and just wait with a pending order, wait with a pending limit order, and give us the best shot at an excellent risk reward. So we'll talk about that this week as well. Lots going on. Again, I'm here out in Austin for the next, I'm coming back on Tuesday. So just for the next few days, I'll be presenting mobile. I love the mobile lifestyle. It's kind of fun about being a trader, right? We can set up shop pretty much anywhere. It will affect our schedule in the morning tomorrow a bit, and that's going to leave us with a shorter chat. but we'll make every minute count. We'll have a regular chat session on Tuesday, and we'll be right back to our normal sessions starting Wednesday when I'm back in the office back home in Florida. So in the meanwhile, I hope everyone's had a great weekend, and I'm looking forward to seeing the members in the chat room tomorrow. All right, take care.